Hey there! Welcome back to another episode of BizDateUp. When you hear the word investment, you undeniably think of stocks, gold, bonds, etc. Why so? Traditionally, over the years, we've learned about these being a bit safer investments. But is investing all about playing safe? Nope. In India, most of us mistake investment for a side income, which is a very short term and minimal. Let me tell you what investing really is. Investing is all about play big or go home. Investing is supposed to be all about risks and high returns. Higher the risk, higher the returns is something you've definitely heard of before. In this video, we are going to talk about how investors are now switching from old traditional investing methods to non-traditional methods. When you use the term investments, the notion behind it states that a person usually puts his money into well-known assets such as stocks, bonds, real estate, gold, etc. Although given the recent times, most of these markets are underperforming. Investors these days have been looking for an opportunity where they can grow exponentially and make up for all the losses they have incurred during these market crashes. Thus, non-traditional investment methods are being adopted by investors, with startup investing being the most common one. Although investing in startups has its own downfalls, like complete loss of capital, yet a lot of investors have been shifting their focus from traditional investing into this much more volatile market that gives off high returns. As per the union budget, there has been massive support and finance at the disposal of startups in India for the growth and development of our Indian economy. They are referred to as the future of our economy and are eventually going to represent the corporate sector in India. Let us look into the reasons why investors are shifting their focus towards investing in startups. Investing in startups has quite a few pros like high returns, portfolio diversification, being a part of growth, and encouraging young minds to make great changes that benefit the society. High returns. One of the main reasons for investing in startups is the high returns that are generated. When a startup has proper capital requirements and management, then investors can achieve more than expected. There are different stages of investing, and it is often said that investing early has its own benefits. The investors will have better leverage in controlling the system of the startup. In return for their investment, you get ownership in the company, and by just providing initial capital and management services, the harvest will be outstanding. The startups in India are growing at a very rapid pace, and investing individually or collectively can be more benefit. There are over thousands of new startups in India every year, and the chances of them being successful are relatively less because of their inexperienced nature and lack of capital or guidance. Thus, if you invest in a startup, you also have all the rights to give them guidance and help them make decisions. The startup you invest in can either make you or break you. The high returns are definitely worth the risk. Diversifying opportunities. Apart from the high returns and benefits of early investing, investors get a multitude of diversifying opportunities. They say you should put all your eggs in one basket, which means you should always keep your portfolio diversified. So even if you face a loss, you won't lose all of it together and can always cover up for it. There are various startups in different fields and sectors, giving investors a wide range of startups to select from and diversify their portfolios. Even though startup investment involves the risk of complete loss of capital, yet through portfolio diversification, this risk can be minimized to the least. The returns generated from one startup can range up to 2,000 times, which can easily cover up losses. Can be a part of growth. Finally, investors end up putting their money into ambitious entrepreneurs that bring new and inventive concepts to the market. Investing in such entrepreneurs who are filled with passion and are dedicated to providing innovative tactics would undoubtedly lessen startup risk. As an investor, you should understand that startups rely on your investments. Your single investment allows them to advance in the market, Not only investments, but an investor also provides mentorship to the founder to increase his or her chances of getting complete returns. If the entrepreneur and the investor have a good and participative connection, the startup will bloom effectively. Startups have a bright future ahead of them, and investing in them will allow them to thrive while also profiting an investor who believed in the idea. Thus, engage yourself with BizDateUp and start investing in startups today with a small amount to make big changes. At BizDateUp, we let one invest from amount as low as 5,000. This not only allows angel investors to invest with us, but also freshers who would like to start their startup investment journey but don't know how to. For further details, head on to our website bizdateup.com.